Hey guys, good afternoon, everybody. Today is Monday, June 19th. Happy Monday, everybody. Happy Juneteenth for you guys who are celebrating. Today's a US holiday, so the market was closed, no live session, but we are here for the mentoring session. So just give me a few moments, guys. Let me finish updating this. Sorry, I just blanked out for a second there. Let me finish updating the details here for the video, and then we will get started shortly with our session for today. So I'm on a few minutes early. If you guys have any questions, feel free to put them in the chat. Otherwise, just sit tight, and then I will be sending this link out to everybody shortly. Just got a couple things here to update. It's been kind of busy learning PineScript and trying to automate some of the strategies like the V1 variation. So that's what I've been busy with. Took one trade today. It was a V1. Played out perfect. Low volatility, but it did play out. So, all right, looks like the stuff is updating real quick. I'm just going to send this link out to you guys here in the premium, and then we can get started shortly. All right, go. There. So let's get a few moments for people to make their way in, and then we'll get started shortly. Gonna post this up on here too. It's gonna be a lot easier. Just do everything all in one go. Okay, perfect. All right, so let's get a few moments for people to make their way in, and then we will get started shortly. So if there's any questions, guys, feel free to put them in the chat. I need to check my messages. I might have a few questions here from a couple people regarding one of the strategies. Let me check my entry from today. It's been a trade tech this morning. Was, let's see what the bias was for today. I don't even remember what it was. It was bearish. It looks like, yeah, it's bearish. That's why I took the sell today. Well, I mean, it was kind of mixed, not necessarily super bearish. All right, let's get a few more moments, guys. I'm still on a little early, so I'll just wait for people to join in, and then we'll get started shortly. Hey, Barty, how's it going? Good afternoon. All right, good afternoon, everybody. Today is Monday, June 19th. Happy Monday, guys. Happy Juneteenth. Today's a US holiday, as I mentioned earlier. No trading session this morning, but we are having this mentoring session. So if there's any questions that you guys have, feel free to put them in the chat. I don't really have anything lined up necessarily. I just have one question regarding the trade I took earlier this morning. I'll go over that. It was just a V1 variation that came out. It wasn't a great trade, but I just saw some volatility this morning. That's why I took it. Yeah, other than that, we'll take a look. So let's see. I'll pull it up in a few, but it was basically like, I think it was one of these over here. It was actually this one right here. So I'll just rewind to this here. But yeah, if there's any questions that you guys have, feel free to put them in the chat. Otherwise, I'll just go over that entry from today that I took. I know I mentioned not to take any trades today unless you guys needed to trade. The reason for that is because the market was closed today due to the holiday. So I'll also go over that in a little bit as well. Hey Hussein, how's it going? Good afternoon. All right, so I'll just give it a few more moments. I don't want to get started too early because I don't want people to show up at 2 o'clock and just ask the same question again after I've covered it. But for the most part, guys, I don't have any questions lined up for today. The only question that I have is from 1 second, guys. I'm gonna give my dog some water. Right back. All right, guys, I'm back. Hey, Dan, how's it going? Hey, CJ. All right, so as I was saying earlier, guys, I don't really have any questions lined up for today. The only main question I have is regarding the trade that I took earlier this morning. I know I mentioned to you guys, probably not to trade today. The reason for that is because the market closed at about like 10 a.m. this morning. If you guys were trading today, you guys would have saw that the market cut off right here, right at 10 o'clock. And that's the main reason why I mentioned, not to trade. I took my trade at 7, so I got in and out before market close. Which you guys can see right here that the market did cut off at 10 o'clock. So the reason why I was warning you guys not to trade was because I ended up losing my FTMO accounts last year, same day, Juneteenth. So I didn't realize today was a holiday. I ended up holding on to the position, like market kind of died down a bit, had to hold on to it, and then it hit 10 o'clock, and then I violated the criteria because you can't trade over the weekend. And if the market's closed for, I believe, more than 2 hours, it's considered a weekend. So that's what ended up happening to me in the past, and I just don't want that to happen to to anybody else. I did take a trade at 7, so I got in and out quickly, within the allotted time. So let's see. Hussein said, "Hi Sean, I took liquidity push trade on Thursday, which ended up at stop loss. Could you explain a bit if I did anything wrong? I went for 100 pips. However, I seen your previous sessions where TP did hit while bias was towards opposite side. Liquidity push trade came up on Thursday during live session." Yeah, so we'll take a look at that too. So the first thing that I'll look at for today, guys, is going to be the V1 variation, basically the entry that I took this morning. And then we'll go over liquidity push from Thursday, which Hussein wants me to cover. If there's any questions that you guys have, feel free to put whatever questions you guys have in the chat. This session's for you guys. So whatever you guys need help with, drop it in the chat, whether it be a trading strategy, a trading theory. If you need help with your own trading strategy, or if you need some fine tuning help, just drop your questions in the chat. I'm here to help you guys out. So let's start off with the V1 variation from this morning. So I'm just going to show you guys what I took this morning. It was a holiday, so volatility was kind of low. Let's go over here to this chart. So the entry that I took was right here at about 7:09 a.m. So 7:09 this morning, you guys can see the V1 variation right here. So you guys can see we have a pending momentum here. Trend bias was somewhat bearish. I can't really say exactly what the overall bias was because I didn't even bother to look at it. I kind of just looked on the 1 minute. I saw that it was pretty bearish. As you can see, price is pretty much dropping since 6 o'clock in the morning. I saw the entry right here at 7:09, about an hour later, and I just felt comfortable with the position. So I saw this V1 variation here. I'll put the criteria up. For the V1 variation, first you want to confirm the overall bias, as I mentioned. I can't really confirm it because we're late into the session. And there just wasn't really much volatility this morning. So I'll just assume that it was bearish. You can see that it is bearish here on the 1 minute, but I can't say for sure what it was like on the higher time frames, what fundamentals were like, and or what was the sentiment. Let me check sentiment real quick. So sentiment was like heavy on one side, but as I mentioned, the market was technically closed today, so it wasn't really moving too much. Volatility was just very low. So anyways, this is the entry that I took from this morning, V1 variation. We're just gonna assume that the overall bias is bearish. Can't really confirm it. I didn't even confirm it myself. I don't recommend anybody do that unless you know what you're doing. But I already kind of assumed that the bias was bearish just because of how the 1 minute candles looked. Anyways, once you confirm the overall bias, you can confirm the high low, which is right here. You want to confirm that the following candle, basically the candle right after, doesn't matter if it's one before or after, but just the one next to it is either a double body or double wick. So as you can see right here, there's a double body rejection. They're on the same level. Next, you want to confirm that there's a pending momentum in the direction of the trade. So as I assumed here, bias is bearish. We have a bullish momentum here. The next momentum would have to be a bearish signal. So with that said, I entered this for a sell right there. Just went for a quick 100 pips. Let the trade run, went sideways for a bit, and then blasted right through my TP. So that's the trade I took this morning. I took it with lower risk since it was a holiday and volatility was kind of low. So I only took it for 100 lots. So this is my main account, blocking 1,060. You can see the green strip when it went straight to TP. Here is my other account, same as well. 1,000 profit on my FTMO. Here's my MFF. Of course, gave me less profit. You know, I figured this would probably give me more profit because I thought slippage here would work in my favor, but you know, MFF's just MFF. I can't, we can't do anything about it. It's just, that's just what we got to deal with. But yeah, pretty much full TP on there. That's the trade that I took this morning. Other than that, that was pretty much what I looked at. Once I got out of this position, I just wrapped it up because I knew market was going to close. I wasn't sure if it was going to close at 9 or whether it was going to close at 10. It did close at 10, as you guys can see. I'll just take everything off the chart. Go back to current time, and you can see that the last candle here was at 9:59. So market closed over here at 10 o'clock. It's been closed since then. It hasn't reopened yet. And this is considered a weekend trade if you held on past this 9:59 candle. So this is the main reason why I said not to trade on today, because I didn't want you guys to get caught in a position and then end up having to hold on to this forever. Because if you see over here, like say, for example, you just took a random trade, not really a random trade, but say you took a trade over here and then you ended up having to hold on to this for a long time. Like you would have violated the account at that point, right? Because you would have held on to it for too long. So I just got in and out quickly. I wasn't sure if market closed at 9 or 10. It did close at 10. But I think it varied by broker. Anyways, let's see. Question from Mob's asking, could this strategy be used trading with E8? I don't see why not, but I can't say for sure because I've never used E8 before. I know in the past E8 had an issue because their fees and spread were like super wide. I don't know if they're different now, but I mean, I heard they've gotten better. So I can't say for sure, Mob. I don't want to tell you it does work or it doesn't. I mean, if their spreads are not outrageous and their fees aren't like super crazy, then yeah, it should be able to work. No problem. It's just if their fees are super high, then like say for example, I made 1,000 on this trade, right? So when other people used E8 in the past, they would make 1,000 on the trade, but their fees were like 800, so they're only making like 200 profit plus a spread. They might make like 200 bucks. It's not worth the risk, right? If you're scalping, because you're taking on all the risk. If you lose a trade, you're going to lose a full 1,000. If you win the trade, you're going to make so much little because the spreads and fees were so high. So I can't say for sure, Mob. If you scalp with any other strategy and you can go for 100 pips and you make profit on it, decent profit, then I don't see why not. But I can't tell you for sure because I don't use E8. Jerbs is asking, it's not working. The market's closed right now. It's a holiday. Jerbs, market hasn't reopened yet. So it's not that it's not working. The market's just closed. Let's see. Barty said 99% of liquidity works. I have no problem if it hits my stop loss for 1%. We're all trading probability. Yeah, I agree with you too, Barty, 100%. Barty said, Sean, when there's a clear trend, is up and making a high low, can we actually place a buy stop at high low expect price to swing up and catch the momentum? You could use I mean, you can do that. I wouldn't necessarily say not to do it or to do it, but I mean, it's up to preference, right? Like if like you can create your own strategy using my indicators and using my strategies, and you can like set up your own types of entries. You don't have to follow my strategies like verbatim. Like you can see what I'm doing here, and if you think you have a better opportunity to put a buy stop or sell stop in certain places, you can do that. It's just really up to preference. I show you the way that I trade. But there's a lot of people in the group who make little changes and they just enter where they want to. So like how you mentioned, Barney's basically asking, if there's a clear trend, he sees a high low and he wants to put a buy stop or sell stop to catch the correction in the direction of the trend and then use my indicators to identify momentum. Yeah, you can do that, Barney. You can do whatever you'd like. Honestly, there's a lot of people in the group who profit doing their own thing. They use my indicators, they use my strategies, but then they change the requirements slightly to fit their trading style, right? Some people like to put pending orders. Some people like doing market orders. Some people like doing positive risk reward. Some people like using big risk reward. Some people like trading negative risk reward like I do. The sky's the limit, Barty. It's really up to you. It's really up to how you want to trade. So what I would recommend is to like never force the strategy on yourself, right? If you are following my trading style and it works for you, then great, apply it. But if my trading style doesn't work for you, you can still use my tools. You just have to make small adjustments so that you can align with the way that you like to trade. So yeah, I don't see a problem with that, Barty. It's just up to your preference. I mean, if it's not the way that I trade, then I can't tell you for sure if it's going to work or not. But the stuff that we do here obviously does work, and you can make any kind of adjustments that you like, as long as it works. So, all right, let me see. Let's see. So Martha said, hi, Sean, when trading in the 10-minute time frame, what option should I choose in MT4? I mean, MT4 is just used to execute your trades, Martha, so the time frame doesn't matter. So if you're trading on the 10-minute on TradingView, it doesn't make a difference if you're trading on the 1 minute, 10-minute, 1 hour, 4 hour, daily, whatever on MT4. If you execute a trade on MT4, it's going to execute it no matter what. So your time frame doesn't matter. Unless you're using MT4 to chart stuff, then it would matter. But it doesn't make a difference if you're on like I could be on the 1 hour time frame on MT4, and I could be trading on the 1 minute if you're on TradingView. If my entry comes up here and I hit buy or sell, it's going to enter at that same time, no matter what time frame you're on. Yeah, you don't have to change your time frame. I just use the buy and sell button. Like right now, my MT4 is on the 1 hour. I don't even trade on the 1 hour, but it's just set to that because that's like a default, I think. Yeah, no problem. I mean, the time frame doesn't matter on MT4. It just matters like when you enter the trade. The candles will look weird though. So like the candles will look way different. Like for example, here on the 1 minute, you can see that price is kind of going up. If you go to the 1 hour, price is actually going down. So you're going to see the candles look different, but your entry is going to be at the same time. It's not going to make a difference. Yeah, no problem, Martha. Andrew's asking, is there a reason why MT4 and YM point spread is so large now? It's because the market's closed, Andrew. Market's been closed since 10 o'clock. So there's like, you can't even execute a trade if you wanted to right now. If you put in a trade, it would just not fill. Because like you can see over here that the spread 0 because the market's closed. There's no movement. MT4 is not even, it's not even on right now. Like if you try to, so the spread that's on MT4 is not, it's not actual spread because the market's closed. So there's no, like whatever's showing on your MT4 right now, that's not active. Like if we try to hit buy or sell, it's going to give you an error. Let's see. Yeah, Andrew said it's been over 150 points last week. Yeah, so the reason why the spread is kind of wide right now, guys, is because we're going into summer. So, as I mentioned before, guys, summer is a slow period. So if there's not enough liquidity in the market, like there's not a lot of people trading actively, the spread's going to get wider because it's harder for them to fill the order, right? Like say if there's like, normally there's like, I don't know how much market caps moving per day, but like we'll say in the billions, if not trillions, right? So say like during like busy hours or busy season, winter up until spring, it's probably pushing, you know, millions or trillions or billions of orders per day, right? That pool is just smaller now. So whenever the market is moving slower, the spread gets wider because the brokers have to fill those orders, right? Like if you put in a 200 lot, that's get filled. So it's the same thing with like trading during Asia session. That's why I don't recommend trading during Asia, because you'll see during Asia spreads like 270, right? 270, 360 around there, because the liquidity is not there. People aren't trading. There's people trading, but not a lot of people, not like how they are during New York session. So you just want to be careful. Yeah, exactly. So Andrew said, I see, that's why I get nervous setting pending orders. You don't want to set a pending order because if the spread's super wide, it could trigger your order before it's even at that point. Like say, for example, like, you know, Andrew just said, it's like over 150 points, right? Like say the spread's like 360 and you're like, and I'll just mark it over here. So like say, for example, you wanted to enter a trade here and we're not going to over exaggerate it, but we're just going to say something like, sorry, that's my dog in the background thumping. You guys hear it's Kai back there. He's got a crazy issue. Anyways, let me just draw this right here. So say the spread is 270, right? Which is normal. That's like Asia session spread. So say, for example, right here, Andrew, your entry is at 270, or your entry is like right here, right? It's going to fill you because the spread's it's going to trigger your order. So if you got a pending order right there, price is down here, but spread's 270, you're going to get in right here at a super negative. So like, say your TP stop loss is like 1030, right? You're already right next to your stop loss already, right there. So yeah, I would probably be careful with those pending orders, especially if the spread's super wide. I would just enter market, guys. There's no point. I mean, there is a point, but in my opinion, there's no point because you could get hit and then you'll be stopped out super quick because you're going to be already super deep in the negative. Yeah, Andrew said, yeah, he's been hitting losses with pending orders, so we stopped. Yeah, I don't really like pending orders personally. I only set pending orders when like they're necessary or if I see like a good entry and the spread isn't super wide. Because if the spread is super wide, you're going to get caught up. So yeah, no, that's a good point, Andrew. I thought you were talking about like why is it wide right now? It's wide right now because the market's closed, but it's pretty much similar to like how it'd be during Asia. I mean, not Asia, like over the weekend. Like say if you put an order in like on, I don't know, Saturday and it fills, but you're like super deep in the drawdown. Once the spread tightens up, you'll be in a better position. But spread super wide, you're going to be caught in a different, you're going to be caught so far from where you want to be. So yeah, it's all good. I mean, you'll start to notice it over time, man. Because I think this is probably your first year or second, or it's probably your first year trading with me, like throughout the seasons. If you trade with me every season, like throughout the year, like you'll see how the seasons change. Right now, spreads are wide. They'll get tighter around like maybe like middle fall or early fall, like probably October. Late September, early October, spreads will start to tighten because liquidity is going to get a lot more prevalent. It's going to be around. And then it's going to be that way until like the holiday, like Thanksgiving, it's going to die down. Christmas, it's going to die down. New Year's, it's going to die down. Then New Year's passes, volatility goes back up, liquidity goes back up, and you're going to see tighter spreads. That's just how it is. Yeah, I know. And you said, yeah, it's a tough first year. I mean, you're actually doing pretty decent for your first year because I've seen a lot of people who just like blow accounts, like account after account during their first year. For you, you've actually been like consistently, it's been back and forth for you. You're not just blowing account after account after account. And I think like having these prop firms around now has kind of helped a lot of people. Because I remember back then, like when I first started trading like 10 years ago, I would see people who would just deposit like their life savings into an account, right? They put like 5,000, 10,000 in an account and they just blow it. It's crazy. But with these funding companies, it's like, okay, you buy an account, you blow it, you got to buy another account. It's not like you're just like taking the trades and then letting them run to like how deep stop losses you can go. So it's all good, Andrew. You're gonna have consistency over time. I mean, especially with this group, you're gonna find more and more consistency over a period of time. So All right, let me scroll up real quick. The next question was from Hussein. So he wants me to go over the liquidity push on Thursday of last week. So we'll take a look at that. It's kind of hard to go back and look at those entries, but I'll try to see what we can find there. Hussein, because I can't remember. Here, let me see. I'll pull it up actually. So let's go over to Thursday real quick. So let's go to Thursday. Gonna turn everything off here. See, Thursday, 6:30 a.m. And then I'll pull up the results from that day too to see like what. So I can't remember like what was going on that day. Like all of last week was kind of all over the place. So I don't know. Like I don't remember taking a loss on that day though. So yeah, because let's see, Hussein said he took a liquidity push on Thursday, which ended with stop loss. I didn't take a loss on that day. So let me see. That day was on the 15th. Let me check because I would have to look at the analysis for that day, right? My 15th was actually a really good day for us. So I don't know what happened. I mean, it looks like liquidity worked on Thursday. Hussein, I'm not sure how you took a loss because they didn't even go into drawdown. So this is the entry from Thursday. 15th, right, Hussein? Gotcha, okay. Yeah, so okay, you said Friday. Okay, so let's go to Friday. No, that's fine, no problem. So on Friday the 16th, I didn't take any trades on Friday, so I honestly I can't remember what happened on Friday. Was there something going on that day? Hussein, if you could just refresh my mind, because I can't remember if something was going on that day. I mean, there must have been a reason why I didn't take a trade that day, but I can't remember. Like it's been too long since Friday. Here, I'm just gonna pull it up and we'll see. So I'll pull it up and we will see what might have happened that day. I just can't remember, but let me see. All right, we got Friday over here. 6:30 there. All right, yeah. So Hussein said you took no trades that day. Bias was bullish, but liquidity hit from the short side, 15-minute liquidity. I think I remember what happened this day. I think there was like a lot of weak liquidity that day. And here, let me just mark it up. So let's just start off and we'll just mark up liquidity from Friday. I know I didn't take any trades, but we'll mark it up just so that we can have an idea like what happened that day. All right, 1 second, some water. Okay, thanks, Andrew. So yeah, Andrew said there was a lot of weak liquidity on that day, and the top liquidity hit pre-market. So I think I was looking for a top liquidity, but it already hit pre-market, so it didn't meet my criteria. Let me see. Yeah, Hussein said, yeah, it was a 15-minute liquidity. That's why you said you weren't going to take it because it was on the lower time frame. But let's just go and take a look at it. We'll see what you could have done differently here. Because this is how you learn, right? You learn from your mistakes, you learn from your losses. It doesn't necessarily have to be a mistake, but you learn from your losses. So this is the daily liquidity. Another one right there. And this is how I mark my liquidity, guys. So if you guys are wondering how I mark my liquidity, all I do is I turn on my high-low indicator. So this is a clean chart. Turn on my high-low indicator, go to the daily time frame. And then I mark up liquidity, which has not been tested. Basically high lows that have not been tested. Because typically if they haven't been tested, that's like areas where people place their stop losses. So I'm just gonna go and label these so that you guys can see. And this is great. This is a good question, Hussein. I'm glad that you asked this because a lot of people, they'll take a loss and they never go back and review it, right? They never learn from it. I think the main reason why I didn't take it, well, I know for sure it's because it was a weak liquidity, but also because there wasn't, the bias wasn't in that direction. I know bias isn't necessary. Because you'll see a lot of times that liquidity will hit even though bias is not going that direction. But But when the bias is very strong, I think on Friday, the bias was super strong for a buy. That was like another reason why I decided not to. If the bias is like kind of iffy, I'll like maybe take it. But if it is, if it's really strong, then I won't take it at all. I don't even bother looking at it because I would just be too worried that price may pull back and then hit my stop loss. So. All right, we got the 8-hour liquidity over here. No liquidity on top. I think that was the thing too that I was kind of worried about. There was like not a lot of liquidity on top, or there was a lot of liquidity on the bottom. Usually if there's like too much liquidity in one area, it's usually not a good sign because that just shows you that price doesn't want to go down there. But market's not always going to give you the same thing. It's going to, you just kind of have to decipher what the market's trying to show you and use that to your advantage. So let's go to the 1 hour. All right, going down to the 30-minute. See, as you guys can see, the market starts to get choppier and choppier as we get down to the lower time frames. That was another reason why I was kind of like iffy about it. Whenever you guys get a choppy market, that's when you want to be a little careful about taking liquidity or just any trade in general, because you don't want to be trading when the market's not moving directional. All these strategies that we apply, they're all based off momentum. So they're all trend based and we make our entries based off momentum. Like we just identify direction through trend. And then we identify our entry points through momentum. So I think for this right here, so I remember marking this up right here. And it was just, because I think Martha asked this question. She was asking like, how do you know when it's too early to mark up liquidity? And I marked that liquidity there because I figured that level was going to get touched at some point. Because like normally I wouldn't mark up this liquidity right here. Like, see how this is just one candle past it? You need about like 3 or 4 candles, maybe sometimes 5 candles to establish the actual liquidity or the high low. This right here was on the second candle. The reason why I marked this up, and I remember this question from Martha, was because price was so far away from it, right? Price was about like 1,000 pips away. I was like, okay, this is never going to it's not going to get hit in the next 30 minutes or so. And it ended up getting hit. It doesn't happen all the time because it's such a big move. If you measure it, like, odds of price moving 1,000 pips on like a slow day, not very likely, but Friday, the market was a little crazy. So it actually did come down and hit. Liquidity. And if you guys are new here, this is pretty much what we do every morning. If you guys want to go back and review any of the live sessions or even just sit in on the live session tomorrow, you'll see that we do same thing. This is how I mark liquidity every morning. I use my indicators here to make these adjustments and identify where where these trades should be taken. All right, so I pretty much marked up all liquidity here. I typically only go down to the 10-minute, but I don't even really like using the 10-minute. I feel like these areas of liquidity are not very strong, but we do it just for visualization purposes. I'll go back down to the 1 minute here. So this is how market opened. This is a 6:30 candle right here. And let me just check the rest of the messages here, and then I'll see what everyone else kind of mentioned here. So Andrew said, also, we didn't trade on Friday because it was too risky because of bias and retail sentiment. It was 70 short. Yeah. So I think on Friday, everything was pointing towards buy. I think we had like bullish fundamentals, bullish retail sentiment, bullish trend. So just like any sells were like out of the question for me. I just didn't want to take any sells there. That was basically one of the main things that I was more concerned with. Martha here also mentioned she's been marking earlier liquidity below the 1 hour with a different color for easier identification. Hopes to help you guys. Yeah, definitely. So I think I'll do that too, Martha. So thanks for the heads up. I think what I'll do in the future is I will mark up the weaker liquidity with like, we'll just color it red for risky, right? It's red. So maybe we'll do that. We'll mark up these lower ones like 15 and 10 minute, or you even said below 1 hour, anything below 1 hour with red, because it's just going to identify that that is a risky area of liquidity. So this was the liquidity zones marked up for Friday. And let's just see how it plays out. So Hussein here took the sell for 100 pips, and then unfortunately he ate the loss there. And I'll try to see what could have been done differently on Hussein's part to prevent himself from getting caught. So, okay, one thing right here is that price is overextended. It's way overextended. So this is a high point right here. Price is down here about 1,300 pips. This is overextended, right? If price goes sideways here, then this is fine. It's okay if price goes, sorry guys, there's a dog barking. I'm just trying to make sure my dogs don't bark. Okay, so price was overextended here for about 1,300 pips. This is overextended. If price goes sideways from this point, that's perfectly fine. That's exactly what you want to look for. You actually want price to go sideways for a bit so that you can have that consolidation phase and then catch a breakout to the downside. So with this overextension right here, we'll see how price continues to move along here. This is a good sign. We actually like this right here. We want this consolidation here because typically whenever price is done consolidating sideways, it's usually just preparing for a breakout. So you see something like this go sideways, and then you're looking for a breakout to the upside or a breakout to the downside. This is still kind of far from the liquidity area though. So if you mark it up from liquidity down here, it's still like about almost 500 pips away. So what I would typically like to see here is I would like to see consolidation up and down, break down a little bit, more consolidation. And if price was to hit right there, that's where I make my entry, right? If you guys have seen that, I pretty much explained that during every live session. Okay, right here, price broke down below. So I think this is what could have been done differently right here, Hussein. So see how price broke below this point, and I think this is where you got caught. I hit that 15-minute liquidity, and you guys saw my markup from right here. This is what I would have wanted to see. I would have wanted it to go sideways, go downwards, consolidate, and then break through. So I think what you did is you just entered right away. You might have had a sell stop waiting right there, and that's probably where you made your entry point. The problem with this is that the bias was so strong for it was so strong for a buy, and that's why I don't like taking trades against the bias. Because when you get caught in something like this here, price may consolidate just like I marked up right here. And I think that's basically what happened here, right? Price went sideways for a bit. And yeah, so see how this right here, so Hussein got in like either right here or he got in right here. This is not like where I would have wanted to get in. I would have wanted to pull back a little bit, like how I drew this low markup right here. I didn't know this was going to play out, but this is what I would have wanted to see here. I would have wanted to see something like this. So I think the main thing that you could have done differently, Hussein, is for one, you could have waited for bias, or you could have waited for trade to go in the direction of bias, but it wouldn't have helped you out because there's no liquidity up top, right? So it wouldn't even matter. The closest liquidity would be up here and it's so far away. But the main thing from this area here that you could have done differently if you still wanted to take the trade. I mean, I still wouldn't even take the trade if this pattern played out like this right here, for the main reason that the bias is so bullish. Like the bias is like the main, that's always number one for me. Whatever strategy I'm applying, whether it be liquidity, high level momentum scalp, V1 variation, any of that stuff, I'm always looking at the bias. If the bias is a little bit mixed where it can really go in either direction, then I'm okay with taking trades in other directions. But if everything is so strong for a buy, then I'm not even bothering to look at any trades in the opposite direction. So with that said right here, you guys can see my markup. I think price ends up coming back down, right? So let's see. It doesn't come down yet, but I think eventually it does come back down. Okay, so you can see right here that price does come back down and then it blasts right through right here. So I remember some of you guys did take the sell here. But I mean, even at this point, let me see if I could let me try to break it down for you guys. I'll just draw boxes around like consolidation areas. But I mean, either way, I still wouldn't take the trade because price was so strong for a buy. So consolidation. See, this consolidation right here just got too close. Typically, you want the consolidation to not touch the liquidity yet. But I mean, at this point, I already touched it down here. Consolidation. And you can see the fake outs. The fake outs are pretty clear, right? Price comes down, fake out, goes right up. Like for me personally, if I saw something like this, I actually would have taken the buy right here. So like, because I had such a strong bias for a buy, there's a V1 variation right there. I would have actually taken the buy right here instead of any sells. I just traded the direction of bias. And then again, right here, price came back down to this area. See how it faked out at this point? It's another V1 variation. So I mean, I'd take two V1 variation right there. And I would take another V1 variation, right there. I just wouldn't bother looking for sells here at any point. So I mean, main thing that I would have recommended is to just not look for any sells here. I think that's what I did recommend during the live session. I was warning people not to take the sells here at this point. So let's see, Hussein said if it was a 1 hour, 2 hour liquidity, you would have taken it. I still wouldn't have taken it because the buy is so strong for a buy. I mean, maybe I would have taken Hussein, possibly. So I wouldn't say for sure not, because there's been times where the bias is opposite and I still take liquidity. But yeah, so that would have been one factor that would have pushed me towards taking the trade. You can see over here, these are all like 15-minute and 10-minute liquidities. They're not strong at all. Price even comes down to this lower liquidity over here, and it still pushes to the upside. I mean, eventually it does come down, but I still wouldn't take it because the bias is so strong for a buy. So I mean, bias has always been like my main factor with taking a trade. Because whenever you take a trade, you want to trade in a direction. Like you can get lucky trading opposite of bias every so often, but there's going to be a lot of times where you just end up getting burnt like time after time. Like for example, here, if you wanted to take a trade like this, Hussein, I would have only used a 100 pip stop loss. That's if you guys ever take a risky trade, I would keep your stop loss super tight, because you're going to lose a trade either way, right? Like the odds of you winning that trade are very unlikely. So if you want to trade against the bias and you're just taking you're taking a shot in the dark, if you're going to maybe hit that trade, I would just use a really tight stop loss. That's typically what I do. So I did that on Monday, actually. So if you guys remembered on Monday, I took the loss, right? Yeah. So Monday over here, I took that loss off the V1 variation. Oh no, so sorry. I took the and again right here, it was a 15-minute liquidity. It was a crappy liquidity. I shouldn't have taken it. Low time frame liquidity. I took the trade right there, and then I took the V1 variation right here. When I took this V1 variation, I only had 100 pip stop loss because I was already eating up my margin. I lost like about a little less than 3% off this liquidity push. So I lost the liquidity push right there, another low time frame liquidity. I lost it. And then there's a V1 variation that came up right here. I went into it with a 300 pip TP and a 100 pip stop loss. I usually don't recommend that because the stop loss is so tight. But for this here, I didn't have a choice. It was like I either get stopped out early and I'm okay with my accounts, or I blow my accounts, right? Because I was already down. You guys can see over here, I was already down like 500 bucks. I couldn't go down another 500 bucks or I would have blown the account. So luckily took the loss there, and then I made it right back right here with some profit. And then I took another trade after that, made more profit. And I think and that was about it for Monday. So yeah, if you ever want to like take something that's risky, just have a really tight stop loss, because odds of you losing that trade are very likely anyways. So it's like, why would you increase your risk, right? Like I wouldn't use a full TP stop loss if I already know I'm gonna lose the trade. If I know I'm gonna win the trade, then I'll use a wider stop loss because I didn't want to have that cushion. But if I'm taking a risky trade, then I've already considered that trade a loss, but I still want to hop into it to give it a shot anyways. So let's see, follow up with Hussein. Hussein said, can trading along with bias make any ordinary strategy an extraordinary one? Yeah, exactly. I think that's a problem with a lot of people. They don't like have a bias. Like whenever people trade, they kind of just want to trade in both directions, right? Which is okay. You can trade in both directions, but odds of you winning a trade that's going against bias, like if you're going against the market, you're probably going to lose that trade. That's what happens with a lot of people. So like, for example, here you'll see a lot of people will take the sell, they get stopped out. They take the buy, they get stopped out. They take another sell, and they just keep trading both ways. I don't have an example for that, but there's a few people who have sent me their account sometimes, and I'll see, like, I'm like, why do you have like so many buys and sells within like a certain period, and they have a bunch of losses right there, and they're like, oh, I don't know, I was just taking trades. And that's usually how a lot of people trade. They don't really have a direction, they don't have a bias, they just don't have a certain focus. They just want to trade both ways. And you'll see sometimes like some people will do that and they'll get lucky, but most of the time they just leave some blown accounts. So yeah, see, your stop loss was way too wide too, Hussein. So Hussein said that he even had a stop loss that was 35 pips or 35 points, which is 350 pips. That's even farther than the normal stop loss. So you know, in the future, I would probably just, if you want to take a risky trade like that, Hussein, just use a small stop loss, because you want to just cut your losses short. If you want to just keep double dipping into it, like I think we talked about this during our one-on-one session. I mentioned if you want to double dip into the position, just use a smaller stop loss, and then you can make different opportunities. Like you could have taken the trade here with 100 pip stop loss, lost the trade. You could have taken it again right here for 100 pip stop loss, lost the trade, but you still be only down 200 pips versus your 300 pip stop loss that was like too far out. So yeah, if you want to take riskier trades, just you know, lower your stop loss, because then you can just keep taking those chances, and eventually it'll probably hit. Like for example, you could have done the same thing here. You could have taken a sell here, lost it, and then when it came down right here, you could have actually taken it for a second entry at this point, and you would have made it right back. Right? I mean, you probably would have lost because you probably would have spiked up right there. But I mean, depending on where your entry would have been, you could have possibly made it back. That's just basically what I did on Monday. I just took a you know, a retake of the trade, and then thankfully worked out in my favor. So it's just up to it's up to preference. But yeah, if you're taking a risky trade, just lower your risk. Yeah, exactly. Hussein said, yes, you were right. I should have risked 1% instead of 3%. If ever in the future I take a risky trade, we'll trade a small lot size. Yeah. So either trade with a small lot size or trade with a smaller stop loss, or trade with both smaller stop loss and smaller lot size. Because sometimes you just need that gratification, right? You just need to feel like you want to trade. And if you want to do that, just take a smaller lot size. Like instead of taking a 100 lot, take a 10 lot or take a 50 lot, because then your losses are going to be a lot smaller. And then when that good trade comes, you're going to be ready for it. So yeah, you know, it's fine to take these risky trades, Hussein, because a lot of times you'll still win, but it's just up to, like, the market's never going to do what you're looking for, right? So it's better to, if you're taking a risky trade, lower your lot size, lower your stop loss. And then when you're taking a good trade, like the trade that I'm taking, then go back to your normal lot size, normal TP stop loss. Gotcha. No problem, Hussein. You know, it's a learning process. Don't worry. There's going to be a lot of back and forth. It's just going to be a matter of time until you really get all this stuff down. But you'll get there. Trust me, you'll get there. It's just going to take some time. A lot of this stuff is new to you, so don't worry. I can't expect you to know this stuff. I mean, you've only been around for like, what, a couple months now, or maybe even just 1 month. You know, think about it like a year's time, more practice over that time, and you're just gonna be killing it, especially with these liquidity pushes, like how I am, right? I'm taking like 1 liquidity push a day, and I'm making a ton of profit. Like if you look at the results from this year so far, I'm like pretty shocked that we're doing this good. Like I would have never thought we'd been doing this good for the year so far. Like, I mean, for the past couple months, the gains have been like pretty crazy. For like summer season, like for June, 10% gain, May, 15% gain. You know, it's pretty slow. January, February, March, April, and then it started picking up in May. I think this is when I started to introduce the liquidity push to you guys again. And that's why a lot of our wins have been increasing. Because we've had less wins, but we have more percentage gain, because the liquidity push is for 3%. So like every time we win a liquidity push, which is like, a bunch of times a week, the percentage just goes up like astronomically. So I'm pretty excited because if we're going to keep doing these liquidity pushes every day, I think it's going to be a lot of profit going all around. As long as and of course, we'll make adjustments along the way. So if I think that a bias is necessary when taking liquidity push, then we'll include that. But right now, we're just going to keep it as is because we're making pretty decent profit at the moment, not including the bias. So, all right. Yeah, no problem, Hussein. Hussein said, really appreciate it a lot. Thank you. Yeah, definitely. So let me scroll up real quick. And let me see what other questions we have here. So I got Hussein's question there. Scroll down. So Martha said, I spent some time on your website this weekend and I came across the exit strategy video. I'm curious to see how the different TPs are entered in MT4. Do I just move stop loss line to different levels manually? So that strategy was meant for a lot of the intraday and swing trading strategies, Martha. So for scalping, it's not really possible because the moves happen too quickly. By the time you move your stop loss and profit, you're already going to hit your TP. So that exit strategy, what I would typically do is I would, so like say, for example, here, let me see, I'll just look for possible entry here that could have been taken. So I'm just looking for a V1 variation. Okay, so like, for example, right here. Or it's not really a good example. I want to look for an example that's, you're not going to find very many examples here on the 1 minute because or I'll just use this right here. Okay, so we'll just use this right here. Because typically you put your stop loss at the previous swing and the previous swing is so far out, it's like right here, right? So just say, for example, and we're just going to use this, there's no actual entry here. I just want to use this as an example. What I would do here is, so say, for example, this is your TP stop loss. It's usually a 1-to-1 if we're trading something intraday or swing, because these trades take forever to hit. And they're usually a bigger TP stop loss. Like it's not our normal 100 pips. It's going to be like 1,000 pips or something like that. So if you were to apply something like this, what I did here is I would do it in halves. So like, for example, here, see how this is a 50-50? I would do half of my TP, which is 25. That's going to be where I adjust my stop loss. So that's going to be one level right there. And then half of that is going to be, I don't know, it's 12.5. So we're just going to use something smaller. We're going to use like a 13 just to have the idea like where I just make the adjustments. So the way that this extra strategy would work is if price goes down in profit. So see how price hits this level right here. Once it hits the level, you move your stop loss in profit. And then when price hits that next level right there, you move your stop loss to this point. So you pretty much guarantee all this profit right here. And then now when price is moving down to the next level down here, actually, so you'd have another level. Actually, there's one more level. So 25 plus 13 is 33 or 38. This is going to be your next level down there. So at this point, you already have your TP in profit. Price is pushing down. At that point right here, you would either move your stop loss in profit or you just let it run to full TP. And at that point, it would have hit your full TP. But you have to actively manage it. It's not really possible on the 1 minute time frame because it moves so fast. Like if you move your stop loss in profit, you're probably going to get stopped out too early. This is why you can't use like a trailing stop because it gets in too tight. But if you're trading something like GJ, like, GJ is one of the assets that we would trade in the past. So like, let me just show you an example of GJ here. So GJ on the 4-hour time frame. If you were to trade this right here, this is what the strategy would look like. This is a intraday entry. You have a bullish momentum. You have the trend meter down below that's green. You would enter a buy position right here. Your stop loss would be at the swing right there. See, it's 155 pip. That's a big move. So 155, And then this is what it would look like. So if this is what the trade looked like, you'd make your adjustments at the halfway mark, 25% mark, and 75% mark, right? That's how the exit strategy works. When price pushes up like that and it goes up into profit, you move your stop loss in profit. Price goes up to that next level, you move your stop loss higher to this level right here. Price keeps going, pulls back, you get stopped out in profit. Basically, it was like a surefire way to like win every trade. You would make like partial profit, but the win rate was so high. It was like, like 80 to 90% win rate. So you would make like, 25% of your move, but you would just, every trade would just keep hitting. Some people would just let the trade run, or they make a late entry if price ends up coming back up. They just go and make another entry there. Or for example, right here, it's the same thing, right? You have green momentum, buy signal right here, and then they just do the same thing again right there. They do the same thing. Stop loss be right there. Say like 128. But this is like more so meant for, it's not for US 30. I mean, if you're trading US 30 on like a 1 hour time frame, maybe, but not for scalping. So you make your adjustments right there again, same thing. So again, right here, you do the same thing. If price pushes up, you move your stop loss in profit. Stop loss is in profit right there. Price pushes up, like further, you either get stopped out for 25% of the profit, or you hold on to it, or you take partials at that point, and then price pushes up and hit your GP. So this type of exit strategy doesn't work well with scalping because it just moves too fast, but it's good for if you're swing trading or intraday trading. It's for the older strategies. Like if you want to trade something intraday, you could do that. I mean, you can still trade US 30 intraday. It's just, I wouldn't do it because it takes forever. Or it would either like, it's just too much of a risk. It's so much work. And you can't do it directly on MT4. Yeah, if you wanted to adjust your stop loss and profit on MT4, you would just drag your stop loss and profit. So you just like say, for example, your stop loss is down here. You just drag it up, drag it up, drag it up. And then you just follow, you would just follow price as price continues to move up. There's a lot of different ways to do it. I'm putting together this, I'm trying to put together this script. I'm learning Pine script right now because I'm trying to automate the V1 variations. And then there's another script that I have that can kind of, it basically alerts you whenever you should move your stop loss and profit. I'm working a lot of things right now. So when those things are ready, I will try to introduce them to you guys as a new indicator, and then it'll be helpful. Yeah, no problem, Martha. No problem at all. Let's see. Mob said, "Damn, LP trading just died." What's LP trading? I'll look them up real quick. I never heard of LP. I don't even know what that is. I'll look at it later. But I don't know if you want to put some input, Mob, you can. I never heard. I don't know LP trading, so I'm not sure what you're talking about. I don't know if it's a broker or a funding company, or I don't know what it is. But yeah, all right. So let's get to the next question over here. Let me just scroll up real quick. I want to make sure I'm not missing out on anything here. Scrolling up real quick. All right, so I got Martha's question there. Gian is asking, can you explain how Asia and London session high-low works? I can see the highs and lows, but when you say they act as a magnet to stay away from because they are red flags, I just need clarification. Yeah, sure. So, I mean, it works for any asset. You can use it for Forex, you can use it for US 30, but let me just show you. Let me go to open the chart, Gian. Let me just take everything off the chart here. Okay, so let me just turn everything off. I'm just gonna turn on the sessions. And let's just, yeah, so Gian is basically asking, how the session's high-low indicator works and why do I keep away from it, basically. So the high-low indicator basically identifies the high price for that specific session. So the green line, so you'll see two different green lines on the chart. It's hard to see here on the 1 minute because they're kind of spread out, but you can see right here that this green line right here is going to be, and let's just go to a different day because today's not a good day to use it. We're coming back from a weekend. Let's just go to a middle of the week or something, like for example Thursday. Let's just go to Thursday at 6:30 market open. Okay, Thursday 6:30. So basically, the way that this indicator works is that it plots the session high lows. So you guys can see over here, there's three different colors. There's purple, green, and red. Purple is going to be the Asia high lows. These price plots are the high-low prices of Asia session. So if you go back to Asia session over here from the previous day, I mean, you can't see it here because this is a 1 minute chart, but basic gist of it is that this is how high price got during Asia session, which is like right here. See how price kind of came up. This is the highest point that it touched during Asia. And then this is the lowest price that it touched during Asia right here. So Asia high, Asia low. That's pretty much how all of them work. So if you go over down here, this is New York low, and you'll have a New York high. You're always going to have a high and a low from each session. You have a New York low, New York high, Asia low, Asia high, London low. Those are basically the main sessions. There's also Australia session, but Australia overlaps with Asia, so it's not as strong. It's like one of the lowest volatility sessions, not really useful because it overlaps with Asia. You pretty much just focus on Asia session. So yeah, Gian said that Asia high and low are always a previous day. Yeah, because you can't do the current day because there's no high low that's been established for that day yet, right? So it's only from the previous day. You can't have anything from the current day because it's still running. Like for example, if you ever looked at the high lows during New York session, they adjust. Like you'll see the London candles, they adjust around like 7 or 8 because that's when the session ends. So I think the session for London, I don't know what it is during daylight savings time, but it shifts, right? Sometimes 7, sometimes 8, depending on like what the daylight savings time is. But here, I'll even see if I can find it. Let me see if I can go forward a little bit. Okay, so this is kind of easier to see right here. See how we have London high and London low? Okay, see how the adjustment happened right there, Gian? So see right here how the London and New York highs is around this point, right? It's right here. This is where London high and New York high is. When the session ends, it's going to update. So see how the London high is now up here? That's because the session just ended for that day. Now it's a new day because London ended and now it's New York session. So it changes. It just goes to what the previous day is. You can't show you what the current day is because it's just going to keep adjusting. It's not going to be useful to you, right? Because and the reason why this identifies as an area of manipulation is because price typically goes back to the previous session high lows, right? Like say, for example, this is the London high from yesterday, and this is the London high from the day before, right? So if we go to London session and price ends up coming back down, where's it at? We went so far ahead that like it adjusted. So if we go from like Thursday up until Friday, and you can see how the adjustments happen, like see how London high is right here. This is now, or this was the London high from the previous day. So see how I drew the line right here, Gian? And this was the London high before. So this was actually the high. Look where price came down. And this is where London open happened, around this area right here, right? Midnight, our time. So see where price came up to during that time period? It came back and retested the high point, that red line. So that's why it's an area of manipulation, because price will typically go from London high it comes back down, and then it goes back up to London high the next day or like 2 days later. One thing that DJ used to do, DJ Jasmine, Appa's brother, what he would do is he would mark up these high lows, and then he'd wait for them to come back like 3 days later. Like he would have it marked up on Monday, and then he's just waiting for price to get to that point, say Thursday, and he would just make money as price goes up to that area. He would just write it back to that same price point. So that's one thing that a lot of people do. They'll just mark up the high lows and they'll just have it level there. It's not even a strategy that I taught, but it's like a pattern that they would see because price would get manipulated. That's like a magnet. It goes from like previous high from Monday and it pushes away from it, and then it comes back to it like say Friday or Thursday or Wednesday or whatever day it ends up going to that point. Like for example, right here, we have this New York low here from like, I don't know, when was this created? Friday, I guess. Like I wouldn't be surprised if price comes back down and retouches that point at some point in the future, right? Like say it might not even happen this week, but say it happens. See where price is going down right now? Like today's Monday. And look where price is currently coming down right now, right, Gian? This price is probably gonna get tested by like Friday this week. It's gonna be at the same exact high-low price. And I typically don't like trading around those points because when it gets down to that point, one of two things are going to happen. Price is either going to bounce off it or it's going to break below and continue pushing down. So you take a 50% chance when price gets to that point. So like at this point, you can take the buy and you might hit your TP. You might take the sell, it might hit your TP. But for me, I don't like taking chance. Like when I'm trading, I want to know for sure it's going to hit. So that's why I avoid the session high lows. Right? I don't like losing trades. Like I don't like leaving things to chance. Like I'm not here to flip a coin or roll a dice or whatever. Like I want to know for sure. If I'm going to take a trade, I want like a 90% chance of it hitting. I don't want a 50-50. I want it for sure. So that's why I keep away from it. But some people trade it. I mean, like you can trade, like you can create a strategy off it. It's just for me, it's just I don't like trading at chance. Yeah, exactly, Gian. Yeah, Gian said New York, London, Asia, if it's near the line, keep away. Basically, whenever price is near any of these horizontal lines, like any of the lines, it doesn't matter if it's a session high low, news price, opening price, whatever it may be, I don't trade at any of those areas. Like if you look at the red flags, well, I mean, I trade at them sometimes, depending on the strategy, but see red flags when to avoid trades, when price is near sessions, what we just talked about, and then also down here, opening price, news price, candles too big, prices ranging. This is just stuff that I figured out over time. Like, I've been trading for a long time, so I already know where like price starts to move kind of weird, and I just avoid them instead of me taking the risk of taking a trade at that point, because you can get lucky. Like for example, you trade at the sessions. Like for example, here, see how the manipulation happens? You could get lucky there. Like you can take the buy and your trade might hit. You could take the sell and your trade might hit too, but you're taking a 50% chance at that point. You're kind of just, you're flipping a coin. It's going to land on heads or it's going to land on tails. And I don't like trading that way. So different ways to do it. But yeah, if you want to just write down the red flags, Gian, it's basically any horizontal lines. Basically any horizontal lines, it's going to be the red, green, purple line, or the blue line, which is opening price, and then news price, which is the pink price. And then whenever candle is too big and whenever price is ranging. But yeah, if you want to write that down, Gian, there's a whole video on it, but if you want to write it down, feel free. This will help you increase your win rate. This is why like I have such a high win rate, because I'm very careful when I'm trading. Like if I think it's risky, I'm not taking it. It's not worth the risk. Got you, Gian, no problem. This is gonna help with your win rate, bro. So you're good. I learned all this stuff over time. Like whenever I figure out something, I share it with you guys. I never hide this stuff from you. Like I'm not avoiding a trade for like a random reason. I'm avoiding it because I lost like, a bunch of trades at those price points. So if there's anything I could do to help you guys out to avoid losses, trust me, I'll let you guys know. I'm not going to hide anything from you because I don't want you guys to be losing. Obviously, if I'm not losing, then you guys should not be losing either, because we're all doing the same thing here. And we're all trading, the same thing at the same time, for the same session, for the same asset. So I'll try to keep you guys as updated as possible, but red flags are something that have been around for a while. I just don't apply them as much, and I don't post them as up anymore, because I feel like everybody kind of knows them, but some people just don't know them. Like Hussein. Hussein's new here, so he's like not familiar with red flags. But if you guys traded with me last year, I had red flags on the chart like through the entire session. Like the red flag sticker here was pretty much on the chart at all times, because you couldn't enter any trades, like all the V1 variations. You couldn't enter any of these trades if the red flags apply, because the red flags apply to everything except for the high level momentum scalp. That's basically the only strategy that doesn't require it, but it would be helpful if it was used. It's just I've tested it and it works fine without the red flags. So that's why I don't necessarily follow them for that specific strategy or for the liquidity push. All right. So that's it with that question right there. Let me scroll down a little further. All right, one question from Sam. Sam's asking, hey, Sean, do you have any recommendations on data I could use to replace currency.com? I trade other assets at times and futures aren't available for them. For example, DAX. So let's see, let's look at the DAX index. I think is it DAX 30? I know they changed the number, right? DAX 40? Trying to figure out what the DAX is. Let's see. Let's go to futures. So I know you like to trade DAX. Yeah, for me personally, I don't know exactly what you would use, because I was looking for DAX too before. I was kind of curious what I should use if I wanted to trade the DAX. I can't say for sure, but it looks like, I mean, it looks like this one might be the main one. Nah, that doesn't look right. Oh, capital.com. You can use this one right here. So I haven't used this one before, Sam, but I've seen people use capital.com. DE30. Let's see. I don't know if this is the same one. I know there's a couple assets here that I mean, they just never changed the symbol, but it's the same thing. So I can't say for sure DE30 is I mean, they all look kind of different. Yeah, it should be DE40, right? But even this one right here doesn't look that good. I don't know if this looks normal to you for DAX. I don't think it does, from what I know. So you might be able to use JUR 30, but also it doesn't look good on here. I don't know if this is normal because the market's closed, but I mean, you can probably use ACAP. I've seen people use ACAP. So if you do JUR 30, or I mean, it should be JUR 40 right now. Pepperstone. I would probably use Pepperstone. So I mean, there's a lot of options that you can use, but I think Pepperstone, from my experience, I heard Pepperstone is good. So but I don't know. I can't say for sure. ACAP is okay, I guess. The Black Bulls. I mean, all the data sets here they're okay. I wouldn't say they're good or great, but I would say that they're maybe okay. Pepperstone is like, one of the more well-known names. Okay, gotcha. So Sam's trying to find data close to FTMO. Yeah, I'm not sure what it would be, Sam. Yeah, because I don't even, let me pull up DAX on mine. Let me just pull up my MT4. Let's see, cash, CFD. JUR 40. Okay, let me see what it looks like. Let me see what the pricing looks like. All right, so pricing is 16,210. It's a little off here for Pepperstone. No, actually, so Pepperstone might be kind of okay, or I don't know, it's kind of moving right now. So it's only off by 2 points. Sam, if you want to check out Pepperstone, FTMO right now is 16,208. It's currently at 16,210. So it's pretty close. And I think Pepperstone is pretty reliable for the most part. So this might be what you want to check out. Sam, I probably wouldn't use the old asset list, JUR 30. I would just stick to JUR 40. Let me go find DAX 40, PE 40, capital.com. They're about the same. Capital.com might be closer actually, but I don't like how he scales right here. So either check out capital.com, Sam, or Pepperstone. I'd probably use Pepperstone. I like Pepperstone. The candles here look more normal too, versus so they're only off by like a few points, like two or 3 points. Actually, this is closest. So I'm looking at Pepperstone right now. It's like literally it's like off by like maybe a point or half a point. So I would just stick to Pepperstone right here. Spread super wide though. Yeah, but it looks about the same. So, all right, so I think that's probably your best bet. Check out Pepperstone. Looks cool. All right, let me scroll up real quick. All right, let me take a look at Barty. Barty has a bunch of messages here that I'm just seeing. So let me just read your question, your messages real quick, Barty. So let's see. Barty said, I could literally see so many trades popping on with your high-low indicator. Can't wait to get my hands to show you some. Yeah, no, definitely, Barty. The high-low indicator is really useful. I think that's probably everyone's favorite indicator. It took me a long time to put it together because if you guys have noticed, there's a lot of high-low indicators out there, but they're not very accurate. So yeah, the high-low indicator works very well. I think you're gonna like it a lot once you once you have access to it. Let's see, Barty said, I watched an interview of funded trader owner, got to learn about A booking and B booking in the Forex industry. Shady option trading. Yeah, no, I agree with you, Barty. Options trading is options trading is different. It's not the same as spot trading. Barty, what you might be looking for is futures trading, not options trading. Options trading is actually pretty risky. It's probably one of the riskiest assets to trade, because the thing is, when you're trading options, you're like betting on price to get to a certain point, right? If you know where price is going, like for example, if your strike price is up here and you already know price is going to this point, like why wouldn't you make money right here, right? If you're trading options, you're not going to make money until price gets to that point. If you're trading out the money, if I'm trading futures like spot futures, I can make my 100 pips right here, right? I can make my money within this area. And I'm only saying this from experience because I've traded options before. Options is very risky. Like if you're trading options and your strike price is up here, you're not going to make any money until price gets above this point. If you know price is already going to that point, why wouldn't you make money down here, right? Trading the spot price. So I would have to disagree with what you say about options, because I think options is risky. And for Forex, I think you kind of got that kind of mixed up too. You're kind of like bunching Forex, like all of Forex, into like A book and B book. If you want to be A book, just use a regulated broker. That solves your problem, right? So, I feel like whenever people hear about A book and B book, they think that everything's a scam at that point. But realistically, just don't use an unregulated broker. That's really what it is. If you're using an unregulated broker, you're going to get on B book no matter what. Either way, you're going to be on B book. If you want to trade on something that's regulated, you're going to have less leverage, but it's all going to be A book, right? So just keep that in mind, Barty. And be careful with what you listen to as well, because the owner of the funded trader he's not necessarily clean in the trading space either. When the funded trader first came out, they were considered a scam. So just be careful what you listen to. If you listen to any interviews, not everybody is going to be telling you like 100% of like what you should be hearing. You should do your own research. Don't just listen to what they say. Do your own research and understand how like these A books and B books work. Obviously, it's pretty obvious how an A book and a B book works. But if you want to use an A book broker, then use a regulated broker, right? A lot of people don't want to use regulated brokers because they can't afford to like deposit that much in. If you trade with a regulated broker, the leverage is not very high. It's like 1 to 10, if not less, because they don't want you to blow your account. They basically force you to trade lower lot sizes so that it's impossible to blow your account. So just keep that in mind, Barty. But yeah, futures for sure. Like if I had a ton of money to just put into a live futures account and they had a copier for it and there's a funding company for it, then I would have done it. Like if you want to trade futures, I would trade on TradeStation or TradeAway. These are definitely a book because they're regulated. You can't trade a lot of funds though. You need to deposit a lot of funds to trade with them because you can't trade like a 1 to 1,000 leverage. They're not unregulated. They don't even let you trade like 1 to 100 or like 1 to 10 around there. So if you want to trade futures, check out TradeStation and then AMP or TradeAway. These are the three main ones that I'm familiar with and they're trustworthy. Like for example, when I trade Forex, I use Forex.com. It's a book, right? I have like a $10,000 account with them or more. I think like a 40,000. I have 40,000 in my account. So I have a higher account with them. So with them, I'm like definitely a book because my trades go directly to liquidity. Like if I enter a trade on Forex.com, it goes straight to the liquidity pool. It doesn't go between the broker. There's no broker in between. So if I enter a buy or sell on Forex.com, it goes directly to liquidity, fills my order, and then I'm in the position. So just keep that in mind, guys. I mean, if you guys want to talk about that, I could talk about that too, because as I mentioned, I'm trying to start up a prop firm, but it's tough, guys. You guys can't start like there's no prop firms out there that are A book. There's like not one prop firm out there that's A book. Everybody's B book because it's impossible. You can't just have like everybody with a 200K account and then have enough capital to like fund all those people. It's literally impossible. So just keep that in mind, because there's no A book prop firm out there. There might be like certain accounts that are A book, but for the most part, all prop firms are all B book because they all go through their own server. So just keep that in mind. Like Funded Trader, they're a B book prop firm. Even though he says that they might be A book prop firm, they're for sure a B book prop firm because they make most of their money from people losing. So just keep that in mind, Marty. Don't believe everything you see in those interviews, because a lot of the stuff that they're saying is not necessarily 100% true. All right, so other than that, let me see if there's anything else here that Barty mentioned. Let's see, Barty also mentioned, hey Daniel, how's it going? Daniel Hearn. All right, let me scroll down real quick. All right, let me see if there's any other questions here. So, I just want to make sure I don't miss anything here. Scrolling down real quick. Let's see, Dave's asking, quick question. Have you tried the high-low momentum strategy on Forex, like GBP and the higher time frames, such as a 1 hour or 4 hour? So I haven't really tested it on Forex before, guys. I've seen other people in the group who have tested it and they've had luck with it, but I can't say for sure because I haven't tested it myself. But like, for example, just using this right here, there's lower low, buy signal broken close past the pivots 1 and 2 right there. If you would have went for a 1-to-1 size of the candle, right there, 75 pips, it would have worked out. So, I mean, it looks like it could work. It doesn't necessarily look like it'll always work. If you were to trade it this way, I would have to incorporate the trend. If you're trading on the higher time frames, guys, incorporate the bias and trend. It's not like the 1 minute chart where you can take trades in both directions. You should definitely be trading only in the direction of the trend. So like, for example, right here, trend is bullish. So you could have taken this here for a buy and that would have been a full TP right there. But I haven't tested it myself, so I can't say for sure if it works well or if it doesn't, because I just don't have any actual data on this to confirm it. So yeah, Dave, quick answer to your question is I haven't tested it, so I can't say for sure. But I mean, it looks like it works here if you use it enough. It just looks like you're not going to have that many entries though, because these candles don't come up very often. So Yeah, if you want to test it out, guys, feel free to test it out. You guys are more than welcome to run whatever you guys like. You guys have my indicators, you guys have my strategies. It's just up to your preference how you guys want to use it to your advantage. All right, so let me scroll down real quick. All right, question from Hussein. Hussein said, at times there are counter moves and biases do change. Should we always keep an eye with updated bias like every 10-15 minutes? Yes, you should, Hussein. Especially if you're trading during the New York session. Typically the bias isn't going to change very often, but it will change possibly mid-session. So like you'll see that maybe like the first 30 minutes to an hour it'll be bullish, and then halfway through the session it'll turn to bearish. So you don't have to check every 10-15 minutes, maybe check every like 20 minutes. I think 20 minutes would be cool because the live session is only going on for an hour and a half. So you would only have to check it like maybe 4 times throughout the entire session. And I'm usually doing that myself too. And people in the group are usually having input, Hussein. So you typically don't have to really check very often. There's usually going to be other people in the group that are saying, okay, the sentiment has changed, or the fundamentals have changed, or the trends changed. But yeah, you should make that a good habit to identify the bias pretty much all throughout the session, or just periodically whenever you get an option. Spilled on me. All right, so yeah, it would be beneficial for you to check it throughout the session, Hussein, but it's not really necessary. I mean, I'll usually be checking it for you. So if you forget, I'll usually be giving updates for that as well. Yeah, no problem, Hussein. All right, next question from Johnny. Johnny's asking, yo, what's up, Sean? Is there any new strategy coming up replacing the high-low momentum for summertime trading? Maybe SR rejection, so you can run, if you can run through an example. Yeah, sure. So the SR rejection, the problem with this strategy is that it's actually kind of difficult. I mean, it's not super hard, but it is kind of difficult. So it's going to be a little hard for us to incorporate this specifically for newer traders. But yeah, I can show you an example here. So let's see if we can find one. I'll see if I can find one from this morning. I don't know if there was one, but I'm going to see if I can find one, and I'll show you if I can see it. So probably not today because the market was technically closed. Let's go to like Friday. I don't think there was any on Friday either, but if not, we'll go to like maybe Thursday. Oops. So if anything, the strategy that might get swapped out with a high-low momentum would be the V1 variation, Johnny, because it goes hand in hand with the liquidity. But I'll show you an example of the SR rejection scalp. This strategy it's pretty good if you can get it down. It's just, it takes a lot of practice because a lot of people misread the entries. That's why I kind of stopped teaching it. But I mean, it's still useful, and it's still accessible for people who want to apply it. Okay, so here's an example right here. It doesn't have to be on a momentum signal, but I'm just going to use this as an example for entry because it's pretty clear. So SR rejection strategy on the 1 minute. So first, you want to determine whether you're looking for a buy or a sell. In order to do that, you just take a glance at the chart. You can see over here, like first you just want to take a look at the chart, and you can see if price is bearish or bullish, right? Just by taking a glance at the chart here, what do you think it'd be? It'd be bearish, right? It's pretty obvious because price is below the pivots, trend meter is red, pivots are angling down. Everything here points toward a sell, right? Even if you don't check the overall bias, this right here can pretty much tell you that you should probably be looking for a sell because price is bearish. So with that said, we're going to go straight to the sell. We're obviously not looking for a buy here. We're looking for a sell. So first, you want to confirm that you're trading the direction of the trend using the trend meter and the pivots. We already did that. You can see over here, price is below the pivots. Pivots are angling down. Trend meter is red. It's pretty obvious. So with that said, we have step 1 met. Next, you want to confirm a top wick rejection off the SR V2 zone. So to do that, you want to turn on the SR V2. And you can see there's a bunch of zones on the chart, right? In order for me to clean this up, what I'm going to do is I'm just going to identify the closest zone, which is going to be this zone right here. And I'm going to draw my own rectangle over it. So I got this right here. Go and draw my zone over right there. And you can see that I have my zone marked up, right? I'm going to clean this up by turning off the indicator. So going back to step 2, you want to identify a top wick rejection off the SRV2 zone with a moderate red candle. So in order for it to be moderate, you want to make sure that if there was a bottom wick, you want to make sure that it's not a big bottom wick. You want to make sure that it's not like bigger than the candle. Right here, there's like no bottom wick at all. So this would actually be considered a strong red candle. It doesn't have to be strong, it has to be moderate. Like for example, this would be moderate. There's like a small wick below it, but it's not really big, right? The body's bigger than the wick right there. Same with this one right here. There's a big body, small wick below it. I consider that moderate. Same with this one over here. You can see that this one over here is the body's big. The wick down below is not so huge. That's gonna be considered moderate. Let me see if I can find a weak one. Okay, so like this candle over here. This one over here is not going to be moderate in my opinion, both of these right here. So this candle right here is not moderate because the wick is pretty big. It's almost as big as the body. I'm going to consider this weak. This one over here as well. This one right here, the wick on the bottom is big. It's almost as big as the body, if not bigger. I'm going to consider that weak too. This one right here is a strong red candle. There's no wick on the bottom. This right here is strong as well. This one right here is not necessarily strong or weak. I just kind of find it as an unusual candle because it has like a big wick on top. So this is like one of the main reasons why I think this is a difficult strategy, because a lot of people have difficulty identifying whether a candle is moderate or not. It takes a lot of practice, just like studying candle patterns, just to see like how they look, whether they're strong or moderate. But this is usually what trips out most people. So with that said, going back over here, as you can see, it's a strong red candle. Again, it doesn't have to be strong, it just needs to be moderate. Going back to the criteria, step 1, confirm you're trading the direction of the trend. Right here, price is in a downwards trend, price below the pivots, trend meter red, pivots angling down, it's in a downwards trend. Step 2, you want to confirm that the top wick is rejecting off the SR zone with a moderate red candle. This candle right here is a moderate red candle, obviously. We just went over that. Step 3, you want to confirm that you're trading in the direction of momentum. Right here, there's a momentum signal that's closed on the specific candle. That's going to confirm that momentum is going downwards. Once you confirm that, you can take this for a short position right there. Go for 100 pips, let the trade run. And there you go, full TP. So there goes an example of an SR rejection scalp entry. Let me go back and see if we could find another one here. This is like closer to the end of the session, so I probably wouldn't even be looking for entries there. Let me see if I can go back to like 8 o'clock. So if like there's one during the live session. Okay, so here is an entry at like 7:59, like right before. So this would be during the live session. Again, right here, well, we're looking for the same thing. Again, you don't have to have a momentum signal on the specific candle. You would just, this just happened to come up with the entry. I would look for another one here, but there's no other entries here. I mean, there's probably one right here. Okay, so this is maybe another one. This is actually a better example because it's, there's no momentum on it. Plus, it's not a very strong candle. It's not a weak candle at the same time. So this here is probably a better example. Let's go down to, man, I got so many strategies here. I always get mixed up. Okay, there we go. So again, we're looking for a sell here because obviously price is bearish, price is below the pivots, trend meter is red, pivots are angling down. We're gonna go down to the sell criteria. Confirm you're trading the direction of the trend. We just confirmed that. Step 2, you want to confirm a top wick rejection off the SR zone. So I'm gonna do the same thing here again. You guys can see we have the SR indicator on. In order for me to clean that up, I'm just gonna draw my own zone. There's a zone right here. Once you have that drawn up, I'm gonna go ahead and turn this off. We now have a clean chart. So going back to step 2, you want to identify a top wick rejection off the SR zone with a moderate red candle. Right here, we have a red candle. It's rejecting off the zone. And this right here is where it gets kind of iffy, like I mentioned earlier. because for me, I can see this as a moderate red candle because the wick on the bottom is not huge. The body is a little bit bigger than the wick, so it kind of meets criteria. It's not a strong candle. It's not a weak candle. It's a moderate candle. It's right in between. So this right here is going to be moderate to me. We have the criteria met up there. So again, step one, confirm and trade in the direction of the trend. Trend is bearish. Step two, identify a top wick rejection off the SR zone. It's rejecting off the zone right there, and confirm that it has a moderate red candle. This candle right here is moderate in my opinion. Next, you want to confirm that you're trading in the direction of momentum. Right here, we have a sell momentum. And lastly, you can enter on the close of the candle. There's also going to be notes here, avoid red flags. That's what we talked about earlier. We're just going to use this as an example, so I don't care about the red flags right now. This is just an example for this specific entry. You have everything lined up right there. You enter for a short position, 100 pips. You got that lined up right there. Let the trade run. Hold TP right there, straight to TP. So you're basically looking for a rejection. Like the way that the strategy works is that it's kind of similar to like a break and retest. If you guys are familiar with the break and retest pattern, this is basically it, but we have better criteria. So instead of just looking for a break and retest, we're also confirming the trend. We're also confirming the zone here, and we're confirming momentum. So it's basically a break and retest, but we have more criteria here to make it a better, high probability trade. So does that help, Johnny? If there's any other examples you want to see, just let me know. But you can see it's pretty simple. Like if you can get down like identifying moderate candles, I don't think it's much of a problem. For a lot of people, that's like one of their problems because they have to think about it too much. Like if you have to think about that too much, this strategy is not going to work out because you have like a couple seconds to make that decision. Am I going to take this trade or am I not going to take this trade? And for a lot of people, they think about it too long. And when they're thinking about it, it's already blasted through TP. So yeah, no problem. Johnny said, cool, thanks, got it. I just got to practice now. Yeah, you just got to practice with it. It's a strategy that you don't necessarily get right away. It doesn't click right away for a lot of people. It's like one that you have to see examples for and you have to see during real time. Because it's hard to see like when the market's moving unless you like really know what to look for. But you'll get it. It's not super difficult once you're able to practice it. The problem with a lot of people is that they don't want to practice. They just want to have like the examples or they want to have the requirements. But when the market's actually moving, it's actually moving really fast, especially on the 1 minute chart. So it's got to get it down, have a plan set up, and then execute whenever the trades come up. Let's see. Johnny said there was a strategy that you were working on live and still testing. Which one are you talking about, Johnny? Because I'm not sure. I know you kind of left for a while and you just came back recently. So I'm not sure which one you're talking about. I don't know how long you've been gone or like which one you're referring to. But if I'm working on it, you should probably not even care about it. Like if it's not one of the official strategies, it should not even be on your mind. Like, because if you're trying to get this stuff down, focus on like one strategy and then get it down and then move on to whatever you need to move on to next. Because there's a whole library of different strategies. There just isn't anything that like I would necessarily say you should be focused on. Like there's not one strategy that I feel like if I'm coming up with another strategy, there's no need for anybody to like really be focused on that because there's like a whole library of other strategies that work perfectly fine. Let's see, Hussein said might be referring to the 1 hour, and then TJ said might be referring to the hike on the sheet. So if you're referring to if you are asking about the hike on the sheet, I pretty much scrapped that idea. Me and Martha talked about it. It's just not necessary. It's not a good strategy it's good for a confluence, but it's not good for actual strategy. Because if you guys have tried trading the hike on the sheet candles, those candles aren't very consistent. They look good like in the future. Like if you look at them after the fact, like for example here, if I was to turn on the hike and the sheet candles here, they look good after the candles have passed. Like if the candle's been going for a while, it looks pretty smooth, but when you're doing it real time, it doesn't look as smooth as it does here. The candles are always changing colors. So it would be good as a confluence, but not necessarily like a standalone strategy. Yeah, exactly. CJ said I tried back testing on the 1 minute, and no lie, it's hard because the candles move fast and the candles are different. Yeah, they don't look the same when you're watching them real time. Like they look nice right here. You're like, because I always hear people ask, like, hey, like this is so easy. Why don't you just take like any sell signal that comes up in the direction of trend? If you try it real time, it doesn't work out like that. Like you'll see the signal come up and it'll disappear, and then you don't even know when the candles close because they're not based off time. They're based off movement. So yeah, not sure which one you're referring to, Johnny, but if you know which one, like which specific one, I can give you some details on it, but I'm not sure because it can be. I brought up like a lot of ideas over the past couple of weeks, over past couple of months, and I'm not sure which one you're referring to. But yeah, I agree with you, CJ. It might be good as a confluence, but not necessarily as a standalone. All right, let's see. Daniel's asking, where's the best place to start to learn your system? So if you guys want to learn, if you guys are brand new here and you guys want to learn the strategies, just go on the website. Go to kodikaitrades.com. Again, that's kodikaitrades.com. Click on unlock your free access right here, and then it'll give you access to the course. This is what the course looks like. It pretty much covers every strategy I've taught to everybody here over the past 7 years now. I've been trading live every day for like the past 5 to 7 years. I started the group about 7 years ago, a little over 7 years ago, and I've been sharing everything with you guys since. So if you guys want to rewatch any of the videos from like the past 7 years, the course is it's pretty lengthy. We have a lot of videos here explaining like literally everything. And then if you guys want to review any of the previous live trading sessions, you can go on the YouTube channel, youtube.com/KodiKaiTrades, pretty much anything at Kodi Kai Trades. If you click on videos here, or if you just go on the homepage, there's like playlists here. Every live session for the past 7 years, I trade live every day from Monday through Friday. So there's basically 5 live trading sessions every week, unless there's a holiday like this week. Live trading results, you can see everyone's results here. Pretty much everyone's results are posted up every day. So if you guys send profits in, we go over the results. Mentoring sessions, you guys can see, like if you click on the mentoring session playlist, how many videos are on here. So I have about 182 mentoring sessions. I go live every week, mentoring you guys like I'm doing right now. I also do one-on-one sessions as well. So anything with a orange background is a one-on-one session. Everything with a green background is a group mentoring session. So I have about 186 mentoring sessions. I don't know anybody else who has this many mentoring sessions available for you guys. If you guys ever want to watch any mentoring, I've been mentoring every week for the past 5-7 years. So, you know, you do the math there. How many months? So there's 52 weeks in a year, right? So if I do 182 divided by 52. So basically over 3 years, almost 4 years of mentoring. I've been mentoring for free for like 4 years, almost. I don't know anybody that has this many mentoring session videos. You guys can quote me on that. I don't know anybody that has as many mentoring sessions as me. How many live sessions do I have? I have 672 live trading sessions. These are real live trading sessions. Like I'm trading live with you guys. I don't know anybody who has traded live 674 times, recorded, it's all documented. Like I don't know who's traded live more than me before. I don't know one person who trades live more than me, mentors live more than me, any of that stuff. So yeah, if you guys ever want to go back and rewatch any of this stuff, go watch the live sessions. I mean, whatever, all of my videos are here. I don't keep any secrets from you guys. You guys know everything that I do here. I try to stay as transparent as possible. So anything that you guys want to review, it's all there. So yeah, other than that, but yeah, Daniel, welcome to the group. I don't know how long you've been here, but if you have any questions, you know, pop into the chat. I can help you with whatever you need help with. But, you know, I'm here to help you guys out because, you know, I believe in good karma, guys. So like for me, a lot of people always ask me like, why do I mentor people? What do I do for free and all that stuff? I believe in good karma. So like I help you guys out and the good karma comes right back to me with my winning trades. So I'm here to help you guys out, whatever it may be, any trading stuff, just pop into the chat. I'll help you guys out with whatever you guys need help with, because I've been blessed. Like over the past 5-7 years, my life has like literally changed, and I've been winning like every trade. So keep it coming. Other than that, let me see if there's anything else here that you guys have. Let's see. Johnny said, you're right. I'm gonna stick to the V1 variation liquidity. Still working on my psychology. Any advice that you may have is forming a strong mindset. So I think the main thing you should do, Johnny, is probably listen to one of the books. So if you go to I don't know if you have an Audible account, but if you sign up for Audible, I think they have like they give you like 2 free credits or something, right? So if you go to Audible, I don't know if it's different from reading the book and like listening to it. I think it's better to listen because you sound like you're like me. You don't like to like read, right? You don't like to really learn stuff by reading. You want to just like listen to it. So I would recommend, if you haven't listened to Trading in the Zone, this book is like #1. Always gonna be #1. And then after that, we use your second free credit to get one good trade. It says one good trade inside the highly competitive world of proprietary trading by Mike Belfiore. If you guys are not familiar with S&P Capital, they're probably one of the most well-known prop firms in New York. They survived the market crash. They made a lot of money during the market crash while everyone kind of blew up. So yeah, if you have an Audible account, Johnny, or if you don't, I'd recommend getting on here. It's like maybe like 10 or 20 bucks a month. It's like a drink. You go out. So just get this book first, Trading in the Zone, and then get one good trade. And then also the Daily Trading Coach 101 lessons for becoming your own trading psychologist. If trade psychology is your problem, which it's my problem too, it's everybody's problem, even myself. These books are going to help a lot. Just like listen to them. If you're just sitting around, just listen to it. And don't listen to it on 2x speed. Listen to it on slow, like on regular speed, because you're going to start to understand it more and you're going to think about it a lot more. I know a lot of people try to listen on 2x speed and they don't even know what they listen to. They'll finish the book and then they'll be like, what did I even listen to? They don't remember anything. So, yeah, if you want to do that, Johnny, that's probably like #1. Listen to that book, this book, and this book right here. These books are like, yeah, they've been like game changers for me. Like once I listen to this one right here, one good trade, I've been taking like 1 or 2 trades a day. If you guys have seen that, and I barely lose. Like I never lose because I just focus on like 1 or 2 quality trades a day and I'm good. Gotcha. Yeah, no problem, Johnny. Yeah, exactly. CJ said blessings on blessings, 100%. I agree. But all right, so I think that might be it from yeah, exactly. Daniel said the teacher always learns when teaching. That's why I like mentoring you guys, because it forces me to review my strategies. And if sometimes it teaches me new things, like I start to learn more stuff that I might have forgotten about in the over the past couple months, if not past couple years. Like this SR rejection scalp strategy, I haven't applied this in like years. And someone brought it up the other day and I took the trade, and we won that trade. If you guys remember, I think it was like this week, wasn't it? It's like on Monday. I don't know. We took an SR rejection scalp and then like it was perfect. It like hit my TP right away. But we took a SR rejection scalp either this week or last week and it played out perfect. I haven't applied this strategy in like over a year. We took it last week and it went straight to TP. So all the strategies still work perfectly fine. But all right, guys, I think that's it for today. If you guys have any other questions, feel free to reach out. You guys can email me, Sean@KodiKaiTrades.com. You guys can also message me on Telegram. Otherwise, if there's anything else, feel free to reach out, or I'll see you guys back here tomorrow for the next live session. So, all right, guys, reach out if you guys have questions. If not, I'll see you guys back here tomorrow morning for the live session as we officially kick off the